Hello everybody, Helena here, and today I'll be covering how to start stocks as a complete beginner in 2020. So as a complete beginner, I can imagine that you're thinking, how can I buy a stock? What does it mean to buy a stock? And what is even a stock? So what it means to own a stock. Basically, the simplest definition, when you own a stock, you own part of a company. And by owning part of the company, you get the benefits that if they grow, your stock will also grow. And what it means to grow? Well, when you buy a stock, you buy at a certain price at a certain time. And then during time, hopefully, the worth of the company will go up, which means that that little section that you own of the company also grows in value. So just by owning part of the company or even a big chunk of the company, depending on how many shares you buy, every time the company grows in value, your stock will also grow in value. And when the stock grows in value, then you can decide when to sell it and then earn the money of the difference between the current price that you sold it versus the price of when you bought it. So now I'll break it down as simple as possible. And if you still have questions at the end of the video, feel free to leave a comment and I'll make sure to answer your questions. Alright, so let's use Facebook as an example. Well, in order to invest in Facebook, you will have to buy a stock in it, which means you'll have a fraction of the ownership of the company. So currently, their stock value, as you can see here, is $261.24. So in order to buy a stock or a share on the company, you will have to pay $261.24. Then by paying that amount, then you get a share of the company. So now that you own the stock, what do you do? Well, the simplest answer is just to wait either a week, a month, or a couple of years, depending how much you're willing to wait to sell it. And then wait for when the price goes up above $261.24. So let's say that you wait for the stock to go up in value to $265, then you will pocket $4 and a couple cents, which might not seem like a lot, but then when you start owning a lot more stocks and then you sell multiple stocks at the same time, the money quickly adds up. And the thing about stocks is that you're finding ways to leverage compound interest. So the idea is not to sell it in a week or a month, but just to hold it for a year or a couple years, so then you can get compounding interest. So what is compounding interest? The simplest way to think about compounding interest is, let's assume that you own a stock that is worth $100 and the stock goes up 1%. So now your stock is worth $101, which might not seem like a lot, but when you have multiple stocks or the price value is higher, 1% could be a decent amount of money. So now you have $101. So now if the stock goes up in value 1% more, now you'll have $102.01, which doesn't mean like a lot, but when you start thinking about bigger numbers, it quickly adds up. So now you know what a stock is and what it means to own a stock, which makes you a stakeholder. So congratulations, you're officially a stakeholder of the company. So now that you know what stocks are, the next question will be, how do you buy a stock? Well, the easy answer is that you need to have a brokerage account. And there are multiple brokerage accounts out there. And some of them charge you a commission, what they call a commission, which is a fee for each trade that you make. So every time that you buy a stock, they might charge you $5 or $3. And every time you sell a stock, they might charge you $5 or $3, which quickly adds up. But fortunately, there's some platforms that let you trade stocks commission free. And one of these platforms, you might heard of it, is called Robinhood. So the good thing about Robinhood is that it is very easy to get an account. So they have effectively lowered the barrier to entry to the stock market, which has flooded the market with new people like me. I started trading Robinhood 4 years ago, and that was the first platform I used to trade stocks. And I really enjoyed it. It's free commission, so they're a great brokerage account to start investing right now in 2020 and reap the benefits of that volatility. Keep in mind, to open these accounts, you need to be 18 years or older here in the US, or you can effectively get a custodial account, which means that your parents give you permission if you're underage. So how do you make money? Well, the simple explanation is just to buy low and sell high. And that sounds kind of like, well, duh, but it takes a little bit of skill and experience to start reading the charts and identify when it's a good time to buy and when it's a good time to sell. But effectively, if you hold long term, it doesn't matter exactly when you buy, and it doesn't matter exactly when you sell, because you will still get the benefits of owning that stocks and that compounding interest. The other way to make money is to buy stocks that have dividends. But what are dividends? Well, basically, some companies decide to pay their stakeholders, like you, if you bought the stocks, a certain amount of money depending on how many stocks they own. So as an example, let's say that you buy AT&T for $30.01. Well, as you can see here, you can see that their dividend is around 7%. So what does that mean? Well, it basically says that if you buy AT&T stock for $30.01 in a year, you will earn $2.07, which again doesn't seem like a lot, but if you own multiple stocks of AT&T, that will quickly start adding up. So the top right here, you can see that there's more information on the dividend yield. There's a P/E, which is the price per earnings ratio, and there's an EPS, which is the earnings per stock ratio. And I won't cover these in this video because it would just add confusion, but it's basically a way to quickly analyze a company and compare it to others. And keep in mind that some companies give dividends monthly or quarterly. So they won't give you that $2.07 right away. They will split it by 4 for each quarter. So you will earn around 50 cents each quarter. So I'll quickly explain what is a quarter. Basically, quarters are composed of 3 months. So every 3 months is a new quarter. So you have Q1, which will be, for example, January, February, March, and then Q2, and then Q3, and then Q4, effectively adding up to 12 months of the year and then completing the total year. So when is it a good time to buy stocks? Well, the answer to that is now. Every single second is a good time to buy stocks. There's always opportunity out there. But basically, there's 2 techniques to do this. Either fundamental analysis, which you'll go and pull out the earnings of the company, the debt, and then analyze it that way, or technical analysis. So technical analysis is a little bit more complicated. It basically boils down to just looking at charts and identifying patterns. Once you gain experience doing this, you can quickly identify patterns of when to buy and when to sell. As you start getting experience, you'll understand what strategies work for you. There's swing trading, which is basically you buy a stock and then sell it in a week or two. There's day trading, which is you buy a stock and sell it on the same day. There's long-term trading, which you buy a stock and sell it in a year or two. There's shorting, which means that you bet against a stock. So you buy a stock thinking that it will go down, and when the stock goes down, you actually make money. And there's contracts, which is pretty complicated for beginners, so I won't even cover it here. So let's cover a simple example of what is long-term trading. Let's say that you bought AMD 5 years ago. You bought 10 shares for $15 per share, and you decided to sell now. Well, the stocks now are around $80, which means that you'll make around $660 in total, and then you'll pay taxes on some portion of that. And that is actually a true example. AMD has gone up that much, and just with 10 shares, you would have made $660. So the easiest way to make money is just effectively to buy and hold long term. So the question would be, what stocks you should buy? Well, the easy answer to that is just to invest in index funds. These index funds are blended portfolios that own multiple companies. For example, the S&P 500 is composed of 500 different companies. So by owning a stock of the S&P 500, you have effectively shares in all different 500 companies. So what this does is basically you have a very safe portfolio. So if one company does bad, you don't lose a lot of money because your portfolio is composed of those 500 companies. So it's a very easy way to make money, and it's a very safe way to make money. So what are typical returns that you should expect? Well, the stock goes up and down, and then for some years, for example, the S&P 500 has been up for 30%, and this other years, a very bad year, it has been down 30%. But on average, if you take big chunks of 5 to 7 years at a time, you can expect a return from 7 to 9% after inflation. So that doesn't mean that you'll earn 7 to 9% per year. It just means that on average. For example, if 1 year the stock goes up 30% and then the next year the stock goes down 27%, on average for those 2 years, you made 3%. Another simple way to make money is just basically to invest in blue chip stocks. But what are blue chip stocks? Basically big companies like Walmart, Amazon, Facebook, that you'll know that will be here for years and years and that will still earn money. Another thing to keep in mind is that for the money that you earn, either through dividends or selling your stocks, you will need to pay taxes on them. So a simple explanation of how the taxes work is that if you buy a stock and sell it after a year, you will pay significantly less taxes than if you bought the stock and sold it within a year. So if you bought a stock and sold it after 2 months, you'll pay a lot more taxes than if you bought the same stock and sold it after a year. So the most important thing as a beginner is to start small. You don't want to be investing a lot of money in the market, not really knowing what you're doing, and then just losing it all. So you start small with $500, play around for 6 months up to a year to understand how to trade, how to buy, how to earn money, and how to lose money. Because you will effectively, without a doubt, lose some money. So you need to understand how to mitigate those losses and then get ahead. So for people that have questions or comments, I'll make sure to highlight them at the end of the video and answer them live in the video for everyone's benefit. So disclaimer here, I'm not a fiduciary, so this is for entertainment purposes only, and you should understand the risk on investing before you invest. So for this week's video, I'll be answering questions from Prince and from Elaiady. Hopefully I didn't butcher your name. So for the first question here from Prince, you're asking how can you invest it and where you should invest it. For the first part, not really sure which broker you're using, but I'm just going to assume they're using Robinhood. So Robinhood recently introduced something called fractional shares. So instead of buying a whole share, you can buy a fraction of a share with a smaller amount of money. So for example, if you were to buy Tesla right now, the stock is $1,500. So if you only have $100, you can invest $100 in Tesla, and that will give you ownership of a fraction of a share instead of a total share. So that's a great way to start investing if you don't have that much money. So the second part of this question, I think, is answered by the first question. With fractional shares, you can basically invest in any company you want, because you can buy a fraction of a share instead of having the money for the total share. So for your question, Elaiady, again, sorry if I'm butchering your name. Your question is a little bit more complicated. Knowing when to sell the stocks is actually one of the hardest parts of this. Simple answer will be to just hold for a couple of years until the value is substantially higher than the value where you bought. But here's one quick trick that I use for technical analysis that gives me a signal I should sell the stock because it's about to go down. But this is only if I'm trading short term, but I'm mostly now trading long term. But this trick has helped me lock in my gains and not lose the money that I already made. So a simple signal I use to sell stock is that if the stock goes down, rebounds, goes down again to around the same price, rebounds again, and then eventually at a certain date, it goes down to around the same price point, that is just telling me that that stock is going down after that. So I'll just sell right there. And keep in mind that this is closing price, because the stock value goes up and down a lot during the day, but I just mainly look at the closing price for each day and make my decision from there. It's usually a great way to just look long term and seeing overall trends on the stock market. So that's it for the video, guys. Thanks for watching. If you enjoyed the content, please subscribe. I'll keep making these type of videos throughout the weeks. And if you have a specific topic that you would like me to cover, just leave a comment and I'll make sure to cover it. Also, if you have liked the video, please help the video. That's the simplest way to help my channel, since the YouTube algorithms prefers videos with a lot of likes. So please help me out. So if you have any questions, comments, or suggestions, please leave them below. I'll make sure to highlight your questions at the end of the next video. And as always, anything is possible if you work hard enough.